step number 1. Let's record these valuation adjustments. First of all, what are we doing again? Well, when I'm a partner in a business, right, and I'm admitting a new partner or giving up a share of my partnership, then what do I want to do? Is I want to make sure my equity, my portion of the partnership, is recorded at fair value. So if in that partnership there's a land and buildings that were bought 10 years ago for R1 million and they're worth 10 million rand today, I want my equity to be calculated based on the 10 million rand fair value today, not the million rand from a couple of years ago. So remember, equity equals assets minus liabilities. How do we get our equity at fair value? We must fair value the assets and liabilities must be at fair value. Remember, in assets there might be an asset called goodwill that's already existing. So that might need a fair value adjustment as well. So we're going to do these adjustments and we'll make assets and liabilities bigger or smaller. How do we do that? We do that with journals, right? So here are our journals. A reminder, assets get bigger on the debit side, smaller on the credit side. If we increase the asset, we will debit the asset. What do we credit here? We will credit something which we will call the valuation account. It's going to be a clearing account where we'll take all the balances of the fair value adjustments from the assets and liabilities and close them off to the capital accounts when we're doing the dissolution. Obviously, with an asset decreasing, you'll credit the asset, debit the valuation account. Other way around with liabilities, they get bigger on the credit side, so then you will credit the liability if the fair value needs to increase and debit the valuation account. If the liability gets smaller, we will debit the liability, credit the valuation account. Now we'll do this for each and every line item. So assets, we might have PPE, we might have inventory being written down, we might have goodwill, we might have debtors. Remember, that will be adjusted with our allowance for credit losses account. Liabilities might be provisions, there might be normal financial liabilities, etc. So all of those adjustments will land up in a tier account called the valuation account. And you can see here's the asset increases, the asset decreases. We also have liabilities that increased or decreased. Remember, for instance, liability 1, why do I debit here if I'm saying it's increasing? Well, I'm debiting the valuation account, okay, because I had to credit the liability. Okay, so we credited liability 1, made it bigger, debited the valuation account. All this description is describing the contra account, but we are working in the valuation account here. So once all of that's done, you'll land up with a balance. Let's assume that the credit is greater than the debit. Doesn't always have to be, it could be the other way around. If that's the case, we will have to balance out the debit side. Okay, we will deal with that in step number 2, the next video. Thank you.